Cool. Welcome to 1022 Mentorship. My name is Mason. Today, we're going to be going over charts. We're going to be going over lots of charts. We're going to be going over some economics as well. And we're going to break down and look at some things. This is my first video back for trading in a long time. I was making playlists or videos for YouTube in like 2023 and 2024. I stopped because I was doing other things, but now I'm back. I'm excited to share my knowledge and information and skills with you because you never know who's out there that'll watch this video and something will click for them and they'll start understanding the markets with a deeper perspective. And that's why I wanted to start making videos again. There's a lot of content on YouTube. There's a ton of content. There's a ton of traders. There's a ton of gurus. There's a ton of financial experts. And I assure you that there are plenty of opportunities out there to learn and acquire skills and knowledge. I, I just think that what I have to offer is valuable, and I hope that you find it valuable as well. So let's go ahead and dive right into it. We're going to call this market outlook. I do want to keep it short. I'd like to keep it short, somewhat short. So we'll see how this goes. We'll see how this goes. So right now, okay, I want to talk about the stock market to start. I want to talk about the stock market. For understanding purposes, okay, the stock market is massive. It's billions of dollars, trillions of dollars. We're talking about retirement accounts, we're talking about IRAs, we're talking about individual accounts, we're talking about foreign accounts, domestic accounts, institutional, central banking, anything, any corporation, any entity that wants to make money work for them, they put it into the stock market to earn a profit. I like to start on the weekly chart because that's typically the best way to say, hey, the market, the stock market goes up all the time, anytime, until it doesn't, right? And when it doesn't go up, that's the opportunity to buy. And ever since social media and technology has gotten better, okay, the whole idea of trading in stocks has changed because when the stock market crashed throughout the years, there wasn't as high tech algorithms and computers to tell you that it was going to go back up. Now we have all this charting and all these tools. When you look at a chart on a screen and you see the history and the patterns and you recognize the repetition of the patterns, you'll see that when it drops, it always gets bought back up. Always gets bought back up. So literally, we can go to the S&P 500 index, right? And we can look at the weekly chart, and every time it's dropped, it's gotten bought back up. We dropped here, right? Bought back up. We dropped here. It bought back up. We dropped here. That was COVID, by the way. We dropped there, right back up. Dropped again. Look, 2022, right back up. April 4th, tariffs, right back up. So, why is everyone so scared now, right? Of a recession or a depression? We talk about this all the time. Online, you hear it all the time. You're always listening to people and gurus and financial experts, and they're like, hey, right? Unemployment data is coming out. Oh, People don't have jobs. Oh, inflation, interest rates, job market, economy, GDP, growth, imports, exports, consumer confidence, all the data, labor statistics, right? Central bank, institutions, federal government, federal spending, deficit, debt to GDP ratio. It's all around, right? There's all headlines after headlines after headlines. You see it all the time. But the market goes down and it goes back up. What's fascinating, and I'm going to show you this, every time the market's dropped and gone back up, we have accelerated the pace at which it gets bought back up. Why is that? Evolution. Why? Why would the pace? Oh, and well, printing of money, of course, right? Obviously, because money is debt. But look at the chart. Look at the duration on the weekly chart. Look at the duration of every dip. Look, 189 days. That dip was 189 days. Okay. This dip was 497 days, and this is an approximation. That dip was 497 days, over a year, obviously. So longer depression, much longer depression for people's accounts, for their retirement accounts, for their individual accounts. COVID was a fucking blimp. Excuse my language. 56 days. I mean, to the bottom. I'm talking about the bottom, right? 2022, 287 days. And then April 3rd, 70 days. 70 days. 70 days. So you can see how it's just gotten exponentially bigger. The dip is still big, but the amount of time it takes to buy the market back up is so much shorter. And we saw that especially over here with COVID and with April 3rd. But markets are unique and they change, they adapt, they evolve, and we don't know what the next dip looks like. We don't know the type of economic uncertainty or worldly events that will occur and happen. We're talking things beyond your wildest imagination that could occur to make the market drop, recover, go up, and everybody's doom and gloom, right? Like, I feel like everybody's looking for a reason for the market to go down. Um, but it will go down again. And that's really the perspective. That's what the market outlook is. This is the first video I want to put out there. I hope a bunch of people see this video. I hope a bunch of people see this video and they go, "Damn, this guy knows what he's talking about. I've been studying this. I I love charts. I love economics. I love fundamentals. I love how money works. I'm fascinated by it because it changes throughout humanity. It evolves. It grows. It dies. It changes. So let's zoom in a little bit because we're a little far out. But we will have another dip. And I can't explain to you how it's going to happen, when it's going to happen, and how long it's going to happen for. Those are unknowns. I don't know if it's going to happen like it did COVID and April 3rd. Could be the same. I don't know. We could just have, um, you know, a massive depression. Why is it not to say we reach a point and then just crater? What need and that's what I want to put in your mind. What would have to happen for the stock market to do something like that, where everybody pulls their money out, right? Something so catastrophic happens. We're talking like New World Order, World War III type of cycle, which, by the way, very fascinating topic. Ray Dalio, if you want to learn more about that. Anyway, sorry, I tend to get way ahead. Anyway, weekly chart S&P 500, okay? Let's look. Here we are, weekly chart. We zoom in to here. This is where we are in the cycle. This is where we are at, right? Right in here. Perfect, beautiful, lovely. Understood. We're going to go to the 4 hour time frame. We're going to pull up an actual chart that looks much better. Let me get rid of that. Okay, 4 hour chart. Here we go, right? We had our dip. We had our 20% dip or whatever this was, our 21% dip. From all-time high, we are only up 7.5%. Not terrible, not bad. Not great in comparison to crypto. Now, here we are today, and this is the market outlook. This is the market outlook. And this is where I'm going to end the call right after I tell you this and I share this with you. Something to think about. I'm not a financial advisor. I'm not telling you how to invest. I'm not telling you what to do with your money. I'm not telling you what's going to happen. I am simply sharing with you my perspective and what I see happening in the world to create a bias for a direction, a possible direction the market might go. And that's all I'm doing. That's it. Okay. This is the 4 hour chart. The 4 hour chart. Here we are. We have recovered all the way from up here, all the way down here, 4,800. We're all the way back up here, 6,700. Okay. 7,000 is the price target. 7,000 S&P 500. 7,000 S&P 500. Okay. That's another, that is another bang. 6%. That will happen. Most likely could happen because possibility it goes to 7,000. Why? Because we are going to cut interest rates, possibly. The Federal Reserve is going to cut interest rates, possibly. We're going to pump the economy full of liquidity, which is what? Debt, which is what? Money. The money gets pumped into the economy and the economy grows from the printing of money. They loan it out. They loan out debt, right? And it creates growth and prosperity. That's the whole idea of the Federal Reserve and monetary policy, fiscal policy, blah, 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 blah. Before 7,000 gets hit, there are some difficulties before we hit 7,000. The current trajectory that we're on, and let's look at the path here, okay? Let's look at the path. The current trajectory that we are on, right? And I'm only going to mark up like, certain pullbacks. I feel like these pullbacks are pretty minor, like these little guys. This is a pretty major one here. This is like a decent sized pullback. That's an okay pullback. That one's okay. Boom, here we go again, right? So here we are. Here's our trajectory. Here's the current trajectory of the S&P 500. Okay? Not many pullbacks. Not many pullbacks at all. You can see the market's going straight up. If anything, the largest pullback was 3.5%, and that was a week or 6 day retracement, which means it was very short-lived. Lots of buying, lots of euphoria. Beautiful. Got it. Now, what I see first, okay? Whoops, I can't type today. All I got to do is do that one now. Okay, first thing, government shutdown, October 1st. When you look at an article, when you look at a headline, take it with a grain of salt. Always take headlines with a grain of salt. Always. Okay, it's much deeper than this. It goes much deeper than this. But you can still take a lot away from it and go, okay, well, White House threat of federal layoffs. White House threatens layoffs, furloughs, government shutdown, agencies to prepare for layoffs, blah, 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 blah. Great, cool, awesome. I love it. I love it. So we're at midst of a government shutdown. What does that mean? What does that mean? Certain federal agencies will be cut off from getting paid, getting money to operate, so to speak. And that will make certain necessary, that'll make necessary government agencies like the Federal Postal Service and the Labor Bureau of Statistics, Bureau of Labor and Statistics. Those are non-essential government agencies. They'll shut down. They'll shut down for a temporary amount of time. And we don't know how long they'll shut down for until they pass a budget through the Senate, until the Republicans and the Democrats approve on a bill, right? This trajectory that we're on right here, okay, looks like it's showing signs of another 3%er. Now, I'm not saying it's going to do that. That's not what I'm saying. That's not what I'm saying. That's not what I'm saying. But the signs, the signs of what's happening shows that we're going to have there's a possibility of a nice little pullback. Like I said, no one can really predict exactly what the market's going to do. Somebody might be able to say, hey, we're going to buy the market here at 5,900 and it's going to go to 6,200. People can do that. Absolutely. Anyone could do that. Doesn't mean they predicted it. It just means they were right that time. That time they said to do that, they were correct. So I'm not saying that this is what's going to happen, but I'm saying there's a possibility with the government shutdown looming. And not only that, so this is it. There's another thing. Not only is the government going to shut down October 1st if we don't pass a bill, okay, the Federal Reserve, okay, is in a very difficult pickle. They're in a predicament right now. And I'm going to tell you why. Not only does Trump want to fire them and put all of his goonies in there so that it's no longer separate from checks and power. Like the Federal Reserve is made to be separated so it doesn't influence politics and elections, right? Trump wants to cut interest rates right now so that in the midterms next year, he can pump the market full of debt and money and spur growth, and he'll be the hero. That's why he wants to fire Jerome Powell. That's why he's calling him an idiot for not cutting interest rates. And that's what's happening. I mean, that's what I see. And there's no and, if, or buts. That's what's happening. Okay. The Federal Reserve is supposed to be an independent body of government. Okay. They're in a pickle. Why? What happens when you cut interest rates? What happens when you cut interest rates and you perform QE when you have inflation? And that's no bueno. That's not good because if you have high inflation, if you have sticky inflation, 3% inflation, 3.5% inflation, and you cut interest rates in that environment, you're going to drive up the cost of prices tenfold. It's different to cut interest rates at 1.7% inflation. That's very different. The prices of goods and services will not go up as bad when you cut interest rates at lower percentage of inflation. That's just how it works. No ands, if, or buts. Okay. So the Federal Reserve is in a pickle. They're in a pickle because they don't want to cause a recession. They don't want to cause a recession, which happens when you don't have enough stimulus for people who don't have jobs, and when you have, technically for the labor market, when you have more people that are looking for jobs than you do have jobs, then yeah, you don't want the economy to slow down. So you stimulate the economy by cutting interest rates. Okay. We're at like 3% inflation today, September 25th, 2025. 3% inflation. Interest rates, the overnight borrowing costs are 4.25% overnight rate for banks to go in and loan from the federal government. Okay. Right now, the market thinks that the Federal Reserve is going to cut interest rates like another 2 or 3 times this year, maybe into 2026. That's what they're predicting. This is all economics. That might be very difficult. And I'm not being pessimistic. I am more of an optimistic person than I am pessimistic. But you have to understand 3% inflation with tariffs, with high unemployment and high joblessness doesn't really pair well because now your tariffs are inflating to goods and services and prices of goods and services. It makes everything more expensive. Not every company is going to be able to just eat the fucking costs. That's just not how it works. Not at all. This is not how it works. It's going to get passed on to the consumer. You're going to be paying more for goods and services. You're not going to go out as much. You're not going to buy as much. You're not going to be making as much. And companies aren't going to be making as much. Their stocks aren't going to be doing as well because the companies aren't making as much revenue because they're based on earnings and the earnings are inflated. The stock market's predicting that the earnings are going to be good. What happens when the earnings aren't good? The stock price the stock prices fall, the shares fall of companies. And you got to remember this stock market rally is made up by 7 companies. The magnificent 7 companies. That's what we're looking at basically, and those are all what AI. What happened in 2000 with the dot-com bubble, right? All of the things that are happening right now are getting carried by technology. Technology is carrying this market on its back, and I would love comments. You know what? If this video goes viral, I know the comment section is going to be flooded with different opinions, different perspectives, different outlooks. And that's why I love this platform because that's what it's all about. I have a different perspective on how the economy will work. Somebody could come up to me and say, "Oh no, the tariffs are a good thing, right? It's going to bring in revenue. It's going to bring manufacturing back to the states, right?" That's an argument. Absolutely. Of course. That's what's great about this platform. Share your comment with me. Tell me how I could improve my perspective on what is gonna happen, okay, in the next month, in the next 8 months, in the next 6 months. The whole idea for this call, and it's gonna be a long one, 22 minutes. Preach, shout out to whoever finishes this video, right? I'm looking at the chart. I've been doing charting for a long time, and I'm looking at this chart. I'm going, it looks a little overvalued. It looks a little overvalued. Am I calling a top? Absolutely not. I'm not calling a top. But I am saying the fundamentals are there for a possible correction. And if it does correct, if and when it does correct, it's already starting to correct. And I'm going to give you why I think it's going to correct more right now. I'm going to share with you why I think it's going to correct more. And I do this with the Dow Jones because the Dow Jones isn't tech heavy, right? It's not a tech heavy stock, okay? The market moves in a certain fashion and it moves with imbalances and Fibonacci retracements. So, just for narrative, okay? This is and I don't know who's going to understand this. I don't know, right? You have a low, you have a high, okay? You have a low and you have a high. You have a low and you have a high. You do this all fucking day, right? That's how it moves. You have a low, you have a high, you have a low, and you have a high. Makes sense? Easy. Okay, simple. Kindergartner could do this. We take a retracement tool. Okay, we draw the retracement from the low to the high. You get a retracement. 5618 is the standard retracement that you get in a pullback. Okay, so boom, look. Low to high, 50%. Low to high, 50%. Low to high, 5618%. Low to high, whoops, I missed one. Low to high, 56.18. Low to high, 50%. Look at this, okay? Look, okay? Watch, watch. Low to high, absolutely disrespected. Disrespected. Absolutely disrespected. The blue zones. Look at this. Look, look. The blue zones right here. See these blue zones? See these massive inefficiencies in price? They're getting respected every time you see it. See this blue zone right here? See that white candle? Big gap, big white candle. Not being racist. Big white candle. Oh, by the way, the candles are actually green and blue, green and red. I changed my chart, psychological reasons. Okay. Blue zone, respected. Blue zone, I could put one here. This price action was very difficult. This was a very difficult zone. I remember trading that. Blue zone, respected. Blue zone, respected. Blue zone. Look, disrespected. Disrespected. See how price respected it barely and then just dumped straight through it. So from the high, 1.93%. So the average pullback is around 1.93%, 1.5%. Look, 1.5%. That one was 1.5%. This one was 1.10%. This one was 1 point, that was 1%. Look at this pullback. Look at this pullback right here. See this pullback? See how that pullback is 4%? You see how that's a 4% pullback right there? That's what I see right now. That's what I see. I see the same exact thing about to play out, right? Where you have your low and then your high, and then see how it just dumps straight through your 56.18 right here. So it's like the same thing. Boom, right? You dump down, look, 1.87%, comes back up into that area, but then boom, it dumps. And where did it go? Oh, I wonder. The blue inefficiency. The blue inefficiency. That's where it went. You want to take the fib even farther? Go from low to high. Probably a 50% on the money. Boom, 50% on the money, just like that. Now, it's easy to go through and look at the past. It's easy. It's easy to go through and look at the past. Look at where we are right now. Look what happened. We disrespected the 50 to 618. We're coming back up into it. And then I think there's a great possibility. Well, we all think a lot. We all think a ton of different things. All we do is think. The fundamentals and the technical analysis is showing signs of a possible move to the downside. That's it. That's it. And that's the market outlook. That's the market outlook. Damn, that was more like an absolute rant. That was like the most insane rant ever. Ever. I love it though. I love it. I love it. So 29 minutes, 29-minute call video. I'm going to post it up. I'm going to upload this to YouTube. I'm going to probably label it as market outlook, parentheses, economic rant. We'll see who watches it. I hope you enjoyed the video. Going to be posting a lot more. Praise to you. Trade well, trade safe. I'll see you all on the next one. Peace out.